Joining us to speak about perhaps both and the implications of the election result in Bihar is Vikas Khemani, the founder and chief investment officer of Carnelian Asset Management and Advisors. Vikas, as always, thank you so much for taking the time and good morning to you. It seems like, and we had a bet on this table, which is when will the results be evident? And the earliest bet was 10:30-11. It's just about 9:30, and that seems to be already the case. 65% vote share for NDA, thumping victory. What are the implications, according to you, for India and the markets?
Good morning. I think it's one more state elections. It's not the first time we've seen state elections. I mean, we see very often, and I think every time there is a sort of big fight. This was anyway not to be big fight, not expected to be a big fight. So I think by and large, during the election, post exit polls, I think it was more or less clear which direction it is moving. So I don't think this will be any major shift in any way in any case. So I think markets are. That's the reason if you see. It's a kind of irrelevant from a market's perspective. It's just one more state election. Anyway, state elections, don't play much role in any specific way of economy in a longer term.
But Vikas, having said that, there was a little bit of attention that was paid to the Bihar elections this week at least. And I know that you have a longer lens on the market. But having said that, once we go past this and start Monday onwards, what according to you is the focus? Because we'll be done with the Q2 earnings season at that point. And the earnings in a large number of pockets has actually been better than anticipated. That's what the numbers show. And the second half is likely to be even better. So what attention are you paying to that, and where would you be focusing start Monday onwards?
I think we will be focusing on Monday onwards what we've been focusing always, in the sense nothing changes. We've been maintaining for quite some time that second half of this year will be far better in the terms of earnings growth. We were never pessimistic on earnings growth, and I think that is what has played out. We remain quite positive. All the structures, drivers of economic growth in India is in place. I think RBI policies are very, very growth boosting. Government policies are very growth boosting. So when both of them are there, I see no reason why growth will not come. And that's the reason I think so. The focus is again going back to identify companies, identify stocks, and work on that. So nothing changes, to be honest. We remain positive in the market, very, very strongly, and there will be some short-term volatility which can come from any news flow, including US markets or something. But I guess if the US deal happens, that could be another potential trigger, which is around the corner. Otherwise, I think market continues its trajectory, and interest rates cut, because there's always something happening around. So don't worry, you will have enough to cover.
Vikas just yesterday wrote this letter, this newsletter, which is the optimist take on managing risk. And I'll talk about that. But, because we are optimists about things happening, for sure, because we're in a country wherein a lot of things are happening. So not worried about coverage at all. I'm wondering if you are a bit worried about earnings as they shape up or not, because the opinion today on the channel from two very different people was completely divergent about whether Q2 leaves the stage for an earnings trough behind and chances of an set of upgrades, or is it the other way around? How do you think about it?
We've been saying this, if you remember our previous all interaction, including Q1 and any time in Q2, we've been saying that the second half of this financial year will be very, very strong in earnings growth, because all the policies which government took, RBI took, which was kind of either to boost liquidity or to reduce interest rates, they all tend to have impact with the lag on the corporate earnings, and that we think that will be very strong. So you will see upgrade cycles. Analysts will be upgrading, and I don't think in this Q2 also there are any major disappointments. I mean, there's some disappointment always happens in any kind of markets, but I think it's broadly has been better than expectations. So I think that will continue. I am not at all worried about earnings cycle. There's no reason to worry. I don't see what will pull earnings down.
Okay, no reason to worry. By the way, the markets as we speak as well, presumably because of this election verdict, I know it's just a day's trade, and Vikas is right. It's just another day, but that just another day has brought our markets higher despite the US markets not doing well and the rest of the Asian markets sulking. In fact, the small caps are in the green as we speak. So pretty good going for our markets, you have to admit. Because I'll come on the optimist take on managing risk in a bit. But let me ask you about the optimist take on how to manage the portfolio. And I wonder if based on and I know you don't hesitate from taking concentrated bets, and which is why my question is even more important. Have you done some rejig in the asset allocation in the listed market portfolios?
I mean, it's again, we increased our banking quite a bit, early part of this year, post 15th August, when Prime Minister made an announcement on potential GST expectation cut. We have made a lot of, when we bought automobiles and some of the consumer names because we thought they would do well. And that has played out. So I think you don't make very, on a day-to-day basis judgments, calls in your portfolio, but structurally we did make some changes in our portfolio. And I think it's all likely to play out further from here. I think, automobiles and consumer-related plays will play out well. I think banking sector will play out well, where we are significantly heavyweight. We have been quite positive and continue to remain very positive on the entire CDMO manufacturing place in various spaces. So all of them are broadly in place and nothing has kind of changed. Of course, last few quarters ago, there was some little bit of questioning around the earnings season, so some stocks got punished, but they're all coming back. When when earnings come back, they will all again be cheered up. So I think against more or less, so we haven't really made, other than the consumer and increasing our banking weight, we haven't made any major changes. Now incrementally we are looking for a little bit more IT addition. We think that IT can do well over next 12 months. Last 12 months it's been performing, so we are kind of thinking around that. We already have some weight, but we might probably add some more.
Specific on the financial space, Vikas, and I want to ask you this because you clearly have an opinion on this because of the portfolio holding that you have. But what Neeraj was speaking about earlier, the other commentator talking about the fact that 11.5% credit growth that we've seen recently, perhaps to a certain extent nudged into double-digit territory because of gold loans. So I'm just wondering whether you have a different take on why you anticipate that the pickup will take place in the credit growth cycle. Of course, interest rates going down, but do you think that that's going to be capex led? Do you think that that's going to lead to it?
See, it's demand is, if you see last year, I think a lot of credit growth slowdown happened because of also availability. There was a liquidity squeeze in the system. Deposit rates had slowed down. Now, I mean, interest rates have come down. Consumer demand is picking up. Capex cycle is on the rise, no doubt about it. Though this time around, capex cycle has been funded mostly through equities. But related to that is working capital cycle, where working capital loans have been going up. MSME and SME is going very, very well. So I think I don't see any reason why. And plus, if you see recent policy measures of the RBI. There were some number of measures to boost growth, including, increasing the limits of the loan against shares of the banks from 20 lakhs to 1 lakh to M&A funding. There was a plethora of measures. So basically, when your regulator is giving you clear message and opening up the more and more spaces where credit growth can come for, that just tells you. And I have never seen when regulator is trying to be growth boosting and growth does not come. And economy, like I said, there's nothing wrong. Economy is progressing very well. So if that's the case, I see no reason why credit growth will not happen.
Well, technically, you never find the regulator as well. But because that's the arguments that pessimists make, that, oh, regulator is doing this, but it may not happen. You're an optimist. Your newsletter suggests that. I read through it. Some key points out there. You quoted Morgan Housel as well a couple of times. I was just wondering, what was that one original piece that you've put in which mirrors the psyche and mirrors your current sentiment on the market as an optimist?
Again, if you like you said rightly that optimists are like very often very common comment you say fund managers are supposed to be always bullish, but that may not be the case, right? So I've been maintaining my bullish stance for quite some time, and I think that's how it's been playing out. But that does not mean that there won't be any drawdown, there won't be any short-term corrections. All those will happen, but broadly speaking, the market trajectory is quite optimistic, quite positive, quite robust. And I think next 12 months market looks 12 months, 3 years and 5 years market look pretty good. Intermittently there will be cycles, so there's no question on that. But I think the stores are in favor right now. Valuations are reasonably on side, reasonably good. Markets have not done well, so we are sitting on a consolidated market. Earnings are picking up. Liquidity is strong. I do believe that next calendar year FI flows will be quite positive. So I think all those things, to my mind, my hypothesis points out towards a good optimistic, positive outlook of markets over the next 12 months.
Okay, Vikas, lovely having you as always. Thank you so much for taking the time out and great newsletter. Keep them up.
Thank you very much, Neeraj. Lovely talking to you.